I get to pick the stock of the day. And I picked corporate travel management, and I'll tell you why. Yesterday it came out with guidance, brokers looking to be pretty impressed with it. It's one of the day's best performers so far. UBS has weighed in saying that the view coming from corporate travel itself looks to be a bit conservative. So its FY 2024 earnings is likely to beat consensus, also according to City analyst. We've got UBS lifting its price target by 2.5%. We've got City, saying that it's likely to beat consensus. So there's quite a lot of positivity towards good old CTD right now. But I also chose it because, of course, we have been getting a lot of information from the travel space. I know I was chatting with an analyst the other day, really liking Hello World. We've seen Flight Centre updating the market ahead of earnings season, and Qantas CEO for one saying that business and leisure travel will continue to pick up. I even was speaking with the CEO of a private travel company just yesterday who said that they're seeing a lot of demand even despite the slowdown in consumer discretionary spending. So I'll go to my guest Mark Moreland from TeamInvest first off this one, because I know that you travel a lot for pleasure and business.
Yep.
The woman I was speaking to yesterday, Lorna from APT Travel, said a lot of people don't look at travel as discretionary anymore. Would you agree?
Oh, absolutely. I don't consider it discretionary at all. I basically do about 4 international trips a year, and I do heaps and heaps of domestic. So but I always have. It's funny, not just in TeamInvest, all through my business career, since I was little, it's always had a lot of travel. So to me, it's just normal.
You were in business when you were little.
I went my first business I started when I was 16.
Young Sheldon.
I was a dropout.
Okay, so does that help inform your view of these travel stocks and where they are heading?
Yeah, absolutely, because you can see it firsthand. I hate Qantas, for instance. So anyway,
I'm just gonna let you go out there.
I'm still using them, but they're really gouging. It's really annoying. Anyway. Corporate travel was a very good choice. It's a very, very interesting business. It's been a wealth winner for TeamInvest for a long time. So I'm a shareholder as well. So I bought quite a lot in March, at the bottom of COVID, in the $7 range. A lot of our members did, because we had enormous confidence in Jamie Ferris, the CEO, and how the business was. The way we look at it is a 5-year horizon. Remember, so we're not saying are their earnings going to be up in the next reporting period or whatever. Don't really care. The view was that corporate travel was doing 77 cents in 2019 EPS. It's now 17 cents, apart from what they've just announced, which I haven't read. And the business is probably twice the size now of what it was when it went into COVID, because of the acquisitions they've made. And they made some very, very good ones, particularly in the US, where they bought a Travel and Leisure, I think it's called, very, very cheaply, which was enormously complementary to their footprint in the US and so on. So coming out of COVID, once we're back to normal, and it is taking longer than I expected, but it is what it is. In another 2 years, it'll be back to normal, I would bet, and maybe even sooner than that. Corporate travel will be probably twice the size it was going into COVID, and we're making twice the amount of money it was making going into COVID. So the way I think you need to look at it, because it's currently on a PE of 113, which is ludicrous.
Yeah.
That's on the 17-cent earnings. I actually did some numbers on it and said, if I normalise it back to pre-COVID, don't put any growth in at all for the acquisitions, and just assume they go back to what they were earning when we went into COVID, the PE is about 24 on that. I'm very bullish on the future of their profitability and growth. I think it's going to be really good. But there's a reasonable amount of that in the price already.
That's what I was going to ask.
There is. Yeah. So, but I haven't bought any more, but I'm not selling.
Yeah.
So on a 5-year horizon, I'm very, very happy to have a decent position in corporate travel. I wouldn't say, you could buy it now. I'm not saying it's definitely not a sell. It's a hold for me, but I'm very confident in the future of the business. And I think it's way better than Flight Centre, because it went into COVID in much, much stronger position than Flight Centre did, even though Flight Centre didn't have any debt at the time. Because of all their store network, they suddenly had a massive bleed, which corporate travel didn't have. They shut down half the network. They did a massive capital raise. So I think Flight Centre's got like 40% more shares than it had before COVID. So you've been diluted significantly. It's done the Hello World deal as well, but I still think corporate travel is a much more efficient focused business than Flight Centre. Flight Centre is okay,
Yep.
but I think corporate travel is good.
Okay, so that's a hold. Personally, you wouldn't.
Oh, you could buy it now. You could buy it now.
It's not too like the PE is not too crazy.
I'm not worried about the PE. I think you can't look at it that way.
Okay, all right,
Yeah, so.
got it. Is all the good news in the price of corporate travel?
It's similar view. We're looking at the travel sector in general and looking at the price, the share chart from just before, and it's not at its 5-year highs again yet. And the outlook is so strong for travel. We know everyone is sick of Zoom. Everyone is over. Everyone just wants to get on a plane. So, and look at the prices at the moment. Again, Qantas is price gouging. There's no denying that.
Yeah.
But a lot of companies around the world actually have deals, and just like I know our company just books with Qantas. So understanding that and understanding the demand for travel is so high and it's not expected to come down anytime soon. We definitely see upside potential in this company, and it's obviously trading a bit lower over the last 5 years, so it has room to grow. You can't look at the PE, again, as Mark said, you can't look at the PE. It's trading on 113 times, which is just ridiculous. So looking back at the earnings potential, and given the fact that it's come out with a almost doubled EBITDA guidance, is just insane. So it just goes to show that they're benefiting. Well, we're looking at the revenue breakdown as well. So they're really benefiting from European travel at the moment because the weakness is in Australia for this company, but they're definitely seeing a surge in revenue in the European Union and European region, especially in the UK, is really offsetting the weakness in Australia. So again, once Australia comes back online, then Bob's your uncle.
Okay, so is it a buy at this
It's a buy,
price?
yeah.
Got it. Thank you, guys. I'm going to call that a double buy.
Yeah.
You
I'm
love it.
happy with that.
Yeah, good. All right, thanks, Mark.
Because you're not going to like what I've got to say about the rest.
Okay, well, there you go.
Okay.